All right. What's going on, future me? Happy New Year. I hope all is well. Having a great week, month, year, decade, century, everything else. As with every week, I apologize if I have like hangover voice, but as with every week, I want to go through my pre-market plan for this coming week, especially being that it's the first week of the year. There is definitely a lot to cover. Of course, first week of January means that there is NFP as well for the first week of January, specifically on the 6th, this Friday. We also have FOMC meeting minutes, jolts, and everything else. There's also like OPEC meetings on Tuesday and stuff like that. So, with that in mind, right, I know I mentioned in my previous pre-market plan that I'm not really expecting anything, especially as far as any crazy moves, just because it was New Year's week. Not many catalysts in place to make the dollar or the chart overall move in general. So, kind of in very great contrast, this week will be extremely different in that we have a ton of news catalysts coming out. We have a ton of different things to look at as far as where prices as well. Just kind of jump straight into it. We're looking at the DXY, the monthly at the moment for the dollar. And as you can see, we ended the month, we ended the year with a good amount of weakness. As we know, earlier in this month, this monthly candle in particular was wicking into 103 rather than obviously solid bodying like it did right now. A full solid body close with strength into 103 definitely adds to my conviction that we'll be seeing more downside for the dollar. Whether or not that'll be this week, this month, this quarter, it'll be, obviously I don't have a crystal ball or anything like that, but obviously seeing the way that the dollar has been moving, especially the last two NFPs. I know that in one of my previous pre-market plans, I made an observation basically saying like, I believe it was December's NFP number release, or no, November's, excuse me, that we saw a huge move to the downside, especially with, I believe there were rate decisions or FOMC meeting minutes in the, kind of in the cards for that price action as well. But we have the same exact catalyst coming up this coming week. And not only that, the last two NFPs have shown weakness, and if they haven't printed weakness in their candle, there's definitely been like more so of an indecision doji candle to the downside. So obviously I don't have any insider information as far as what the numbers will be once released, but looking at how it's played out for us the last couple of times, we could assume that we should be seeing something similar. And even if we don't, I'm just, again, using this as an observation to understand how I can use these news events as a catalyst to benefit my trading. So, of course, with that said, I would love to continue to see dollar weakness into 103. I know I've been calling for 103 for a very long time, but would love to obviously see a full move into 103, closing obviously here at 103.50 sort of area where we whipped into a couple weeks back. Going into the weekly, you can definitely make a case for getting that full move into 103. Look at this most recent weekly candle close. Look at the momentum on this. Looking at it from this perspective, just looking at the chart overall, this, it's almost like, again, as I said in the past, 103 is programmed even more so now. Like, I'm not necessarily anticipating any retest into the 105s, 105.50 areas to, again, retest that liquidity zone before move lower. It just looks very definitive at this point that we're going to be moving into and potentially breaking under 103, right? When we look at it on the daily, we start to look at these different ranges when we look left, right? Like, we're losing small levels of structure that we were printing above prior. Like, if I were to take this this previous sort of, we can call this kind of a range mid within this range low and range high. If I pull this all the way to the right, we're already breaking that level of structure with, a good amount of momentum, right? Like, we're not wicking into the structure. We're not getting big pushes like we did here in the past. We're actually breaking through it now. So we're kind of in, I don't want to call it necessarily like price discovery, but since prices traded above the 105s for so long and it's now breaking down, we have to look at these previous range levels, these previous floors to see where we're going to end up and where we can find stability, right? As far as I'm concerned, would obviously love to continue to see dollar weakness as I'm getting long on gold. But overall, I would say that both of these charts are at pivotal points in that gold is at a very respected level of resistance, also forming sort of an ascending triangle sort of structure, so it could break pretty soon. And of course, we would need dollar weakness to act as a catalyst for that. So when I look at it from that perspective, I'm saying, we're already breaking back into previous ranges. What are the chances that we continue to fall lower, especially with all the news catalysts coming out, right? So definitely something to take into consideration. We could also draw this channel here. I wouldn't even call for a channel break, when I'm looking at it from this perspective as well, right? Again, we're moving lower, making, lower lows from the previous highs that we just printed, and we're also now breaking back into this previous range that we were trading above for quite a while and retesting, reclaiming, and moving higher from. So, of course, I would like to see the other side of that now, kind of reversing and seeing structure revert back to, I guess we can call it like the 101 sort of mean, right? Like the previous low. So that's kind of my outlook on the dollar. Again, I'm not expecting any sort of strength unless NFP and all these different news events create some crazy some crazy volatility to the upside for the dollar. Especially with I will say, especially with the FOMC meeting minutes, there is especially on that day specifically, I believe it's Wednesday. That day specifically, we could see dollar strength just because, again, like anytime we talk about rate hikes, anytime we talk about how hawkish the Fed is or what their next steps are to raise rates to bring bring the inflation down and get a handle on it, there's always typically a spike just because, again, when the U.S. raises interest rates, typically the dollar gains some strength with that as well. So that pretty much sums it for the dollar. Once again, looking to, or rather expecting and observing more weakness in the dollar. We can jump straight into JPYBasket. And this is a very interesting observation here I made as well, because I did mention in my previous pre-market plan that I was looking for this break of structure. Obviously, we saw the break of structure. And I also mentioned that the most likely place I'd like to see price retest prior to moving higher would be obviously the structure we just broke out of, this level of liquidity, this sort of SR zone. And we printed perfectly. This was absolutely beautiful. So as you can see, almost like a bull flag in some sense, right? Like we could even take it from high to low, the flagpole sort of deal, and then measured move brings us into this previous range that we used as resistance twice. Also in confluence with this sort of trend line, this longer monthly trend line. So with that, definitely makes a case for more JPY strength as well. Over this last week, the Bank of Japan was also announcing that they were basically doing an emergency buying of bonds type of thing. So like they were going nuts with all the money that they printed, buying bonds this week as well. So I'm sure that acted as a catalyst for the earlier downside momentum into the week before that big pop after the 8,000 retest. With that said, of course, wanting to continue to see yen strength as we are trying to take GJ shorts. Again, one area of interest and one sort of level that we could be looking out for is, of course, more near term, the 8,300 level right here, sort of local level of resistance. And then outside of that, the bigger sort of liquidity zone at 8,500, 8,450 sort of area. So those are two levels that I'll be taking a look at just to make sure I observe how price reacts to those levels to make sure we can see clear strength as long as I'm wanting to get short on GJ. But that pretty much sums it for JPYBasket. Nothing super crazy going on there. As you can see, the weekly looks extremely strong to the upside, but we're still trading within the same range we've been trading for months at this point. With that, I wouldn't necessarily spell out anything definitive until we get around the 8450s or 8400 level overall, especially being that would be the range high for the weekly, right? So that would spell out a break of that range high. As we all know, I like to play range breaks, excuse me. So that would spell out obviously previous range reclaims and price discovery back to the upside for JPYBasket if we saw that sort of price action. So again, that's something that I'm going to be taking a look at as well, especially being that it is a range high. Resistance is still resistance, so it's very likely that we could see a knockback there as well. So just overall important level on the chart here around the 8,400, 8,500 sort of area would definitely spell that out as a bouncer break area on the daily and weekly. Looking at on the monthly, right, this monthly reclaim looks really, really good. You can almost kind of, spell out a reversal. We're still trading under this channel here as well. But looks like a lot of strength is being regained by the yen here. Obviously, from a monthly perspective, we have the trend line first and then the 8,900s as far as monthly levels are concerned. But once again, I'll be sticking more towards the daily and weekly for more near-term levels and reactions to see where we land. But again, overall, just expecting more upside on JPYBasket, just because again we've gotten the solid retest, and now we have previous structures to now test. I'll be waiting for the reactions to those structures that we are going to be testing to make my determination of whether or not I'll be getting longed, whether or not I'll be waiting for a break of 8,000 and lower to get to sort of switch my bias and everything else. But as it stands, GJ shorts are extremely valid. Yen strength very clear. Hope that makes sense. Going into GBP futures, and the decoupling is still going strong here. Let me fix this trend line. This has been bugging me. Still seeing the decoupling on GBP futures. I did mention a very local level of support around 119. It looks like we're getting a very small rounded bottom, but again, this is all consolidation. This is all like indecision candles and everything else after the channel break to the downside. So nothing super definitive saying like, oh, like no, we're finding stability now type of thing. I wouldn't necessarily call it quits for downside momentum on the pound, especially when we look at it from this perspective, right? Like we have potential shoulder, we have the head, we have the right shoulder here as well, we have the neckline that we could say is potentially right here. Trend line break brings a straight measure move into 117. So when I look at it from that perspective, I don't want to rule out more GBP future weakness, especially with the way the chart is looking now. And of course, as I mentioned in my previous pre-market plan, as long as JPYBasket and GBP futures are moving in opposite directions, regardless of what direction that is, I am happy, because that means that GJ will be trending in one direction or another. So that's exactly the observation that we're making right now, expecting to move into 117 if we don't stop up at 119 first. Reclaims of this local high are something that would interest me for sure. I don't want to see GBP weakness per se, just because, again, I'm wanting to have the JPYBasket and GBP charts remain decoupled. I believe in the next 2 weeks or so, we'll be having the GBP rate decision as well, if I'm not mistaken. So that'll be interesting as well, because typically when the Bank of England raises their rates, typically their currency price weakens. So that would definitely act as a catalyst for more GJ shorts with the GBP weakness and JPY strength. So that pretty much sums it for the indexes. I hope that made sense. We can cover the weekly really quick before I move on, right? We're just continuing to see that downside momentum after that evening star and rejection of the 618 here. So again, I would definitely, from a weekly perspective, I would expect more downside into the 117s and 116s, back into the level that we previously broke out of to have this range reclaim here. It's also call this kind of like a lower high here as well after getting stopped up here. So if we don't find stability soon, like it's spelling out a move back into the liquidity zone we recently broke out of. So with that said, let's jump straight into the pairs that I'll be trading this week. And I will say there were 3 opportunities on GJ. So this particular week, I actually was not very active in the market. Let me preface it with that. Excuse me, especially with it being the end of the year, last week of the year, I just was kind of hands off in my approach. I had that win on gold. I was like, I'm all good for the year. Like, it's all, I'm chilling. Let's, start fresh, beginning of the new year. So there were 3 particular opportunities that I had on GJ, 3 really good shorts that set up very well that I ended up passing on. Mainly again because it is the end of the year. Well, not necessarily when I'm recording this, right? It's already January 1st. But in that moment, it was one of those things where it's like, I'm pretty good to go. Like, especially again with the amount of sort of slow traffic that you receive on holidays like this. I was just wanting to again stay hands off, start fresh in the first quarter. So I'll cover those trades as well. But as I mentioned in the previous pre-market plan, right, looking at it from the weekly perspective. Especially when we break down from this weekly range mid, we almost always move back into that previous weekly range high around 157, right? We see it back here, we see it back here as well, and now we're seeing it potentially a third time. So it definitely adds a ton of conviction. Obviously, seeing JPY strength and GBP weakness in confluence with what I'm about to say, it definitely adds strength to my conviction in wanting to get short on this particular pair. Even look at this most recent weekly candle close, right? Like huge wick to the upside, got a clear retest of the weekly range mid, solid body close into the previous weekly range highs as well. So again, it just overall momentum is bearish. It's moving to the downside, and that's the sentiment I'll be moving into the market this week with. Hope that made sense as far as the weekly is concerned. We can take a look at the monthly as well. Nothing super crazy. Monthly obviously ended off with huge bearish momentum, breaking back below this small level of structure that made this cup and handle valid. So to me, at least, the cup and handle is no longer valid moving forward. And of course, as far as levels of support are concerned, we can kind of call this a range mid break into this range low around 157, 156 sort of area. So obviously that'll be the next level of interest for me to want to see if price actually holds up, if it finds stability there, or if it just breaks straight through. Again, obviously adding in the context of seeing GBP weakness and JPY strength, we could definitely say that we'll be seeing a lot more downside if we did break that 156, 157 sort of level. So with that said, we'll jump into the daily. The daily was pretty much straightforward. Oh, excuse me, let me delete this. The daily was pretty straightforward. It pretty much followed my plan to a T. There were two levels that I spelled out retests for. The first was a 162 sort of range mid on the daily, and then the latter was a stretch to 164, the neckline that we broke out of. Very clean retest of 162 before that push lower. Like literally beautiful structure right here, right? Like respected this level of support, this SR level overall, moved back into this this daily and weekly range high, as I mentioned in my previous pre-market plan, with strength as well. Again, as I mentioned, wanting to see where we find stability, because as it stands, right, this was a very respected range, 158 and below, very respected range in the past. I've traded this range many times in the past as well, and as you can see, this level in particular at 158, 157 sort of area has always been respected. In the past, acted as a very tough level of resistance to break through. Once it did break through, that level moved like butter into the previous range highs and everything else. And as you can see, that theme remains the same as we look at different parts of the chart, right? Breaks through right here, like butter, finds the next level of structure within previous ranges and then moves higher. Obviously, this was a big news catalyst, but again, all of these levels of structure were respected regardless of how crazy and how volatile price was moving into those levels. So overall, when again we break, or if we break through this level, I'll be wanting to see overall what level of structure is supported, where we'll be going next, and everything else, because I know when we break through this level, it's going to be a I don't want to say a huge move, but it will be a sizable move, in that every time we have moved into this level with strength, it's always been something along the lines of, making big moves into previous ranges, as we see here and everything else. So with that said, as far as where I'll be wanting to take trades from as we break through, or if we break through those levels and all the retracements and everything else, looking at the intraday levels definitely makes things a bit more clear. As we can see, I can delete this fib here as well. Excuse me. As we can see, right, what I spelled out in my previous pre-market plan literally played out to a T. Got the range high retest here around 162, wicked into it beautifully, broke. There was actually an intraday, a 1 hour head and shoulders here, ended up breaking that as well. And then there was the August 22 low breaking retest as well that that played out there also. And so I know, when I first started covering this chart, I mentioned the 3 opportunities that I missed. Those were literally the 3 beautiful, absolutely beautiful trades. Literally, price went down in a straight line. Like you can't line it up better than that. But once again, I was a little bit more hands off, so I'm just gonna eat that. I'm gonna hold that down. Excuse me. So with that said, right, had a very fickle trend line here. Eventually got that break. As far as what we are looking at for this coming week, right, as I mentioned in previous pre-market plans, the August 22 low is a significant area for me to see retest and plays into before it moves lower. So that's exactly what I'll be looking for, right? Even if I were to throw a fib on this, like range or rather swing high to swing low, the August 22 low lines up in confluence with that 382, and then we also have the 618 here at 160, 161 sort of area that also acts in confluence with the 618, right? This is the neckline that we broke out of for that head and shoulders on the 1 hour, and overall the break of this very fickle trend line. So it adds a ton of context and adds a lot of perspective to these very important levels, once again, because those are the levels that we'll be wanting to, or my future self will be wanting to see retested before moves lower, right? Because I'm of a sentiment that I'm wanting to get short on GJ. So the first level, of course, would be 159.50 area on this 382 and liquidity zone, August 22 low, and then that second would be the 618 in confluence with the neckline that we broke out of. Of course, I'm open to the previous levels here as well, around 162 and 164 to get retest from, but I definitely think these more near-term levels will do the trick at the August 22 low and this neckline here at 160.81, 161 sort of area. Of course, I'll be wanting to play those things level to level into this range mid here at 156.85 and lower than that. And that pretty much, I would say that pretty much sums it for the 4 hour. Super straightforward in that regard. And now, going into the 1 hour, we have a very interesting perspective here, right? We have obviously this channel break into the downside, the head and shoulders and everything else that I already spelled out, and now we have a downward trending channel here, right? Like, so is it one of those things where we can get sort of a descending triangle sort of structure, break below 157 and move lower than that, or are we going to be reclaiming these different ranges, seeing those retraces of like 162 or these previous range highs around 160 and everything else, or even the August 22 low, before we continue to get short, right? So again, as far as I'm concerned, I'm just wanting to let the market do its thing and price find its footing early in the week so that I can take advantage, midweek and when I see price lining up into these different zones. And I'm still of the same sentiment, right? We have the December 22 low and the last week candle low here for the year. So obviously very big level for me to see break. If we get clear strength below that level, retest and move lower, that's definitely a trade I'll be wanting to take because again, monthly and last week candle low breaks are a big part of my strategy. Overall, big part of my range break strategy as well. So just to add a bit of perspective and context to that. And then also, of course, retest of this August 22 low as well. So kind of looking at it from my perspective and how I see the market, we have this range high at the August 22 low. Obviously, this last week candle low here, the range mid, and then the monthly December 22 low here as the range low. So I'll be wanting to play it exactly as that. Obviously, shorting August 22 lows, shorting breaks and retests below the December 22 low. And if we get as high as the October 22 low up here, obviously I'll take shorts there as well. It's when we start getting above the 162 and start reaching towards the 162 area is kind of when I'll start getting cautious as well because I want to see a lower high created. If we break back above these local highs here around 162, 162.25 into 164, I'll be sitting on my hands until we reach 164 to make a decision thereafter. So I feel like that's pretty clear. I hope that makes sense. With that, we can get straight into gold. We'll start on the weekly. Very interesting observation here on gold here as well. We actually did get strength into this weekly range mid, which looked really good to me, especially when we get into the intraday levels here shortly. You'll understand why I feel that way. Obviously wanting to continue to see strength into this range mid, break, retest it eventually so we can get into highs, around 1900, potentially 2000 and everything else. I have seen people calling for, a crazy gold rally this year as well, especially with the dollar weakness that we'll potentially be seeing, but again, I'm not a genie. I'm not I don't have a crystal ball or anything like that. So we'll just have to play it by ear and just, take it week by week. But I am seeing, obviously, with this move into the weekly range mid, we are developing some sort of strength. As long as we're not getting these nasty wicks like we did previous weeks, right? Like this looks good to me for a bullish sentiment. Looking at it on the daily, we could call this almost like an ascending triangle, right? Into that 1820 resistance. Also like a potentially, we could also kind of call this a rising wedge here as well. So, or actually, or a rising parallel channel as well. So one of two ways, right? Either we break with this ascending triangle into the 1825s and move into 1850, 1860 area, or we play the wedge and just fall back over into the 1780s, retest, and then move higher. Because that's exactly how I'll be playing it, right? That's exactly what I would like to see. I would love to see, of course, strong print above the 1820s, break, retest, move higher into the 1860s and play it that way. Or I'd be open to retest of obviously the 1800s and lower than that, I'll be open to the retest at 1780. Obviously have maintained this level of structure, this level of support for a very long time. So I definitely feel that it's a very valid and strong structure to take loans from. So it just adds a ton of strength in my conviction, overall to get long from there. But with that in mind, a very small nuance, a very small observation that I made here as well this week on this daily candle is that when we look left, right, we look at all the candles within this range right here, right, all the way from the beginning of the month, December 1st. We get a ton of wicks into the 1820s, a ton of wicks, nothing super solid as far as closes are concerned. And this most recent daily candle, this one right here, was the only candle to solid body above all of these wicks above all of this price and into this zone at 1825. So it's a very small observation, very small nuance, but it could make a case for further gold strength, especially since we have not seen a candle do anything of that sort. Excuse me. And it's those small things that make all the difference, right? Because again, if we would have wicked into this area showing clear weakness, I would definitely expect more rejection from price at this level, right? But we're poking right back at it. We're trying to stretch the limits of where we could be potentially as far as price is concerned. And so looking at it on the 4-hour makes things a ton clearer, right? We have this swing high to the swing low, completely blew past the 618 and now testing the 786. Typically in my strategy, when you blow past the 618, it's very high likelihood that we at least move into the next sort of range high, the next sort of range level, being 1829 at this particular moment. And as far as how I'll be wanting to play it, we also have this swing low to the swing high here as well. And it adds a ton of context for me, at least, because if we do move into 1825 and reject, I'll be wanting to get long around 1805 area, also in confluence with this 618 and 786 as well. So that's kind of how I'll be playing it. We already have the break above 1805. I'll now be wanting to play the retest of 1805 before playing it range low to range high into 1829. If we reclaim the range below 1805 into 1782, I would definitely take longs there as well. As I mentioned, we have a ton of stability in the 1780s, so something I would be open to overall. And then of course on the other side of that, if we break into 1829, I'll be wanting to take a break and retest above that level, playing it level to level into 1865. So literally super straightforward. Like literally, I feel like I say this every week for my future self. I'm literally just playing it level to level. You know, if we break down from 1829, 1805, I'll take a long there all day, every day. If I don't take a long there, I'm pussy. It's just a fact. Excuse me. But with that, outside of that, I'll also, if we break, retest 1829 above, I'll take that as well. If we break back, all the way back down into the November 22 high that we've found stability at time and time again, with strength, and we end up wicking into that area, showing that we are going to bounce, I will take a long, from that level all day, every day, no questions asked. So with that, we can move into the 1 hour. I hope that made sense. And as I mentioned, this ascending triangle sort of structure that I mentioned on the weekly that I was covering about the hourly becomes a ton more clear, right? Because we look left, and I've seen this happen a couple of times here as well. A couple of the same sort of patterns sort of playing out in the past for gold is that we get this sort of fickle trend line, this sort of ascending triangle structure, and we get a big pop, right? Like literally the same exact structure that we've seen back here that acted as a catalyst for this 1800 to 1825 move, this big spike. Obviously, there was a news catalyst in the midst of that. We're seeing it here as well, right? We have this, obviously a respected trend line here. We're moving into a very respected level of resistance with multiple candle closes there as well. And we're just squeezing into this zone. So of course, with that in mind, we, one of two things: either we squeeze, break, retest, and move higher, or we break down from this level. And of course, as I'm playing this level to level, there are a couple of different areas on the chart I'll be wanting to take longs from. Of course, the first being the one I just mentioned on the 4 hour, the break and retest of the 1820s into 1830 and 1860 and everything else. Or on the other side of that, we also have the potential to break down into this previous structure here, right? A very clean level of structure, an SR level that we've used in the past at 1812. Also in confluence with the 618 here as well. So adds a ton of context and a ton of strength in this particular level of structure to want to find stability there. And then the final being this range low here at the 1800 sort of area that we've bounced from time and time again. There was actually a trade here I did not take either. Was it back here? Yes, it was right here. This break and retest right here above the 1800s. Beautiful, beautiful trade. I had the opportunity to take it back here, and I was going to take it, but I didn't like how the 4 hour looked. When it ended up getting into this position here, though, it looked great. I just, again, I didn't, I don't remember what it was. I don't know if I didn't take it overall or if I wasn't at the desk. Either way, I didn't take it. So with that said, obviously we have those levels I just spelled out for a retest. We also have the 1780s and lower than that. I'm riding this all the way out into 1756. Like I'm taking longs till 1756 gets broken. Like it doesn't matter. But yeah, that's overall my my weekly sort of outlook on the market. That's my my pre-market plan for the week and everything else. I hope that makes sense. Again, just to sum it, I'll be playing these level to level, range low retest with momentum, or rather range low retest with long width rejections into them. I'll be taking longs, break retest of the highs. I'll be taking those as well. And overall, that's just my sentiment. That's what I'll be doing for this coming week. And yeah, I hope that made sense. And with that, future me, I hope you're having the best day ever, bro. I hope you're living your best life. Doing everything that you've set out to do. Living to your utmost potential and everything else, making shit happen. And just God bless you, bro. Love you. God bless everybody that's watching, and take care.